Hello everyone, a very warm welcome to you on Unacademy. I'm Prashasti Arora and today we will be talking about the goods and services tax. We know that every month, in fact every second day we see why goods and services tax is in news, GST is in news. So we will analyze it in a complete perspective. We'll understand what were the taxes that were levied before GST and we'll try and understand how exactly does GST function? Now, a little bit about myself before we start with the session. I've done journalism and I enjoyed delving deep into current affairs and current events. Do not forget to follow me on my Unacademy profile, wherein I take my other special classes. And now you can also avail a 10% additional discount by using the code PRAS10. As soon as you put the code PRAS10, you will get an additional discount of 10%. Also, do not forget to follow me on my Telegram channel, wherein I put my schedule of the classes. The study material that I give is all on my Telegram channel. Now, before we start with the session, a little bit about the iconic price hike. It has been confirmed for the 25th of January. So please beat the price hike and upgrade from the plus to the iconic subscription right away. You will have a personal coach that you will get connected with. There'll be mains test series that will also be done. There'll also be evaluation that will be done for it. There'll be a customized study planner. Then there will be study booster sessions. There will be workshops. There will also be answer writing daily that will help you fine tune your preparation. So please do upgrade to the iconic subscription right away. Also, new patches for UPSC CSE 2021, 2022 and 2023 is going to be starting on the 18th of January. So please do enroll for the one you think is best suitable for you. There'll be top educators on one platform. There'll be prelims syllabus coverage from there too. There'll also be doubt clearing sessions. So please enroll for the batches you think is best suitable for you. Now, talking about the introduction of the goods and services tax. First thing that we have to remember about GST is that it is a destination based indirect tax. Please remember, it is a destination based indirect tax. Now, it has a lot of benefits, ranging from the fact that it will allow reduced cost of goods and services, and it will lead to better ease of doing business index for India, and it will also lead to one nation one tax. These are some of the primary benefits that that are derived from the goods and services tax. Now, what we have to remember is that it was introduced in 2017 and it was passed as the 101st Constitutional Amendment Act. Now, how was it passed? It was passed by two-thirds, which is special majority in both the houses of the parliament and half the state legislatures. When I did my special classes on fundamentals of Indian polity, I spoke about why for a topic like GST, there needs to be a two-third majority, which is the special majority in both the houses of the parliament and half the state legislature. Half the state legislatures, because the matter of the subject matter is pertaining to both government, union government and state governments. This was the introduction. Now, what was the situation before there was implementation of GST? Now, before GST, there was the government used to levy VAT. Now, in fact, the VAT, value added tax, was, in fact, GST is very, very a kind similar to VAT. And before VAT was introduced in the year 2004 and 5, there were different sales tax as well. There was different sales tax rates that were levied by the union and the state government. Now, giving you an example of sales tax and what was the exact issue. Now, for example, a person buys raw materials that are worth, for example, say 1,000, and the tax rate is 10% on it. Then the person has to pay a tax of 10% of the 1,000 rupees, which is 100 rupees. Now imagine if he makes a product out of these raw materials worth rupees 500, which includes a profit. Now the manufacturing cost of the product will be 1000, which will be the cost of raw materials plus the tax plus the cost of the final product including the profit, which will fairly amount to 1600. That is the total manufacturing cost. And this first stage is this. Then the second stage is, now the selling price will be 1600 because that is the final total manufacturing cost plus the 160, that is another 10% of the total manufacturing cost that was added. So the total amount will come up to 1760 rupees. Now what exactly is the problem with the example that I have given? The problem is tax on tax. Tax के ऊपर भी tax लग रहा है. The customer is paying taxes worth rupees 150 on the following, 160 on the following, for example 100, which is the price of the raw material, and is being taxed once again for it. And rupees 10 he's paying for the 10 rupees tax, and on the rupees 100 already paid as a tax by the shopkeeper. So you see, there is there is duplication of taxes. This is called the tax on tax, and rupees 50 being taxed on the cost of the final product once again. So the main problem with this was, the sales tax was essentially this, that there was a lot of duplication of taxes. Now how exactly did VAT, the value added tax, when it came up, how exactly did VAT try to solve this problem? Now, giving you the same example, let's see it in that context. For example, a person buys raw material worth rupees 1000. Now he doesn't charge the customer rupees 100 as tax that he has already paid, right? He doesn't charge the customer as rupees 100 as a tax that he has already paid. Now imagine he makes a profit, he makes a product for rupees 500, which includes the profit and the selling it to the customer. Now the total manufacturing cost will be 1500 and not 1600 like in the previous case. Now the selling cost will be 1500 plus 150, that is 10% VAT on rupees 1500, which will equal to 1650. So the customer pays only 150 as a tax and makes a total saving of 1100, right? 1760 minus 1650 is 1100. So this difference is what VAT tried to solve. And out of this rupees 150 is charged as tax, the government will compensate the shopkeeper rupees 100 that he has already paid as tax but has not charged the customer. This is how the VAT functions. So VAT, essentially what it tried to do was, it tried to cut down on all the tax on tax that was levied on every stage. Right, now giving you an example, the issues with tax. Now what were the issues with VAT? Now what happened is that for example, I'll give you an example for an issue with VAT. अब sales and sales tax का हमने समझ लिया क्या issue था. Now we will talk about the issue with VAT. What happened is, for example, Haryana, just giving you an example, Haryana state could charge 10% as standard VAT and Sikkim could charge 20% of VAT. So, I'm giving you the issue with this. What happens is that VAT was just one of the indirect taxes. There were other indirect taxes like entertainment tax, interstate tax, other tax. There were a lot of other taxes. And this was under state government, and these governments had different VAT rates. For example, Haryana could charge 10%, Sikkim could charge for 20%. So the variation, the difference, the actual percentage was different for every state. Now there were also other indirect taxes such as entertainment tax that I already said. Now these multiple rates and multiple taxes actually were a hindrance to commerce, because at every stage again there was that tax and this tax and that, for example entertainment tax and interstate tax, and that also hampered India's ease of doing business. Now which is why, because of all these issues, because of these issues, the government extended VAT and called the new tax the goods and services tax. So this is how GST came into existence. So if you have to write an answer, a mains answer on how GST came into existence, you can give these examples, and you can explain it with the issues that were there in the previous tax regimes. Now what GST did was it subsumed most of the indirect taxes that were levied separately, and that would ensure that the ease of doing business is not hampered. Now remember that these we know that GST is a destination based tax. अब हर tax regime में we've seen that there is some loophole or the other. Now in GST, what exactly was the loophole? The loophole in GST was primarily that it was a destination based tax. So the source state lost out at some stage or the other. Now remember that these are standard tax and rates, and states cannot impose their own tax rates. So this really try to standardize the rates that would ensure that there is parity between the rates that are levied by states. But of course, let's see, that also has an issue. And remember, it is applicable to most states products. We know that we've seen in the news that this is the tax slab for this product, and for this is the GST rate, GST percent is this much, all of that, right? Now remember, petrol and petroleum products and alcohol have been kept out of the ambit of GST. And there is central GST, which is levied by the central government. Then there is state GST, which is levied by the state government and governments. And then there is integrated goods and service tax, which is collected by the union government, the central government, and is shared between the center and the state. So it is collected by the union government and is shared by the center and the states. Now talking about the GST compensation, the issue is that even before this I mentioned that the origin state loses out on revenue. For example, for example, if there is if the GST, the goods and services are being manufactured in Gurugram, right, Haryana, if the GST, if the goods and services are going to be manufactured in a source state, and then they're going to be shifted, for example, they're going to be shifted to Karnataka, then of course they will be taxed in Karnataka. For example, Bangalore, right, Bangalore, so they will be taxed in Bangalore. So which is why the origin state is losing out on revenue. So what exactly did the government do to rectify this? We will see. Now we know that GST is paid in the destination state, and this means that the states where the goods and services are manufactured lose out on revenue. To solve this particular problem, the parliament passed the GST Compensation to States Act when GST came into existence in 2017. So the passage of the GST Compensation to States Act was the rectification of the issue with GST. Now how does this function? Now the center will levy GST cess. We've always in the news we've read about GST cess. So what happens is that the center will levy GST cess on sin products. Now what are sin products? As the name suggests, tobacco and related products and luxury goods such as passenger vehicles, etc. And the revenue from this cess amount will be put in a separate consolidated fund, and every year states will receive 14% of the GST revenue. States who have received less than 14% of the GST revenue growth in a financial year will be compensated from this particular account that has the fund that has been created for this only. And this act, the particular act, GST Compensations to States Act, prohibited any other method to collect to compensate states for their loss of revenue at the origin. Now states are eligible to be compensated only for the period from 2017 to 2022. So this is applicable only from 2017 to 2022. So this was about the GST compensation. We talked about sales tax, we talked about VAT, value added tax, we talked about the issues with these tax regimes and why GST was introduced, how similar was it with the other regimes that were there before that, and how did it rectify the problem of rectify the problem of the fact that GST is a destination based tax, and how a separate fund is there for compensation to all the states that receive less than 14% of the GST revenue growth. So this was about the GST. Please subscribe to Unacademy if you've not done it already and avail all the benefits. Thank you so much.